Good morning, traders. It is Tuesday, the 30th of August, 2016. It's 8:01 a.m. Chicago time. Thanks for joining me. Hope you're having a glorious morning. It's very dark and rainy here in Chicago. It seems like almost nighttime here. But anyway, derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The driving news overnight has been fairly light. There are a few items that came across. Um, Japan jobless rate came in at 3% versus 3.1, the lowest since 1995. Furthermore, uh, the German August CPI for Saxony came in at negative 0.1% versus plus 0.3%. Pretty far off. And in July, the UK mortgage approvals came in at 60.9 versus 61.9. There's a little bit of color on that. July net consumer credit for the UK came in light as well. Eurozone business climate indicator 0.02 versus 0.36, also way off. Consumer confidence negative 8.5 in line. And then also at 5:32 a.m. 6:32 a.m. Eastern Time. Fed's Fisher reiterates that the viewpoint rate path depends on economic progress, aka data dependent. There's a very critical eye on this Friday's jobs number. The expectation for this Friday's jobs number is that it's likely to be very more volatile than the ones we've seen before. And that's a pretty big deal. As far as the general news, insurance companies have been dropping out of the Obamacare healthcare initiative, and the administration is doing things to make it less risky for those insurers to participate in the program. And that's a big deal for those who are in the insurance industry, those stocks that are in the insurance industry. Japan's unemployment rate's at its lowest in 21 since 21 years ago. Um, and the Brexit's having a big impact on UK mortgage market. The number of new mortgages given in UK in July was 60,912, making for the lowest total in 18 months as uncertainty took hold following the June 23 vote for British exit from the European Union. The pound is slightly lower this morning. Saudi Arabia has holding its lowest reserves since July. The foreign exchange reserves fell by $6 billion, the lowest since February 2012, not since July. And gold is doing something it's only done twice in the past decade. The price of the precious metal has historically moved in tandem with the rate of central bank balance sheet expansions, but it is not keeping up right now. Gold is down this morning. It's down 0.41%, $5.30. And then, of course, you've probably heard that the European Commission fined Apple 13 billion euros in clawbacks in Ireland. That comes out to about 2,800 euros or so per Irish citizen. That's a lot. But it comes out to $14.5 billion, and we're seeing a reaction in that stock. Um, anyway, that's basically what I see in the overnight session that might impact stocks relating to the broader market. As far as what's on deck for today, we just got the U.S. Case-Shiller housing numbers. The numbers came in slightly better than expected. The Case-Shiller 20-city HPI month on month came in at negative 0.07% versus negative 0.1% expected. Year on year, 5.13% positive over 5.12 expected. So, and then other than that, looking at what's on the sheet, What we have left today is at 9 Central, which is a half hour after the open. We get consumer confidence index. That could be a mover. It's a high tier number. U.S. consumer confidence is for August is expected at 97.0. The prior is 97.3. Look out for that number. And I'm not seeing any other speakers or anything else on deck for today. It's been a quiet overnight session. Let's switch gears and, as always, look at our review what we said yesterday versus what actually happened. Now, let me start by saying that the market, as I tweeted out yesterday, the market absolutely blew Hypo 1 and Hypo 2 out of the water. In fact, for me, Hypo 4 was the one that played out, which I didn't cover, which is an open drive or a quick drive up, an open test drive up into 79.5, migrating the point of control to 79.5 in line with the MC point of control. But even though my expectation yesterday was for a choppy open, and the reason behind the context behind a choppy open was a very, very, very light overnight session, very compressed profile in the overnight, not much action going on. We did expect it to push through the overnight high because of the way it was set up. It looked like the overnight session looked like it was ready to reattack the high, but overall expected it to be very choppy tomorrow in that morning session, and then to slowly creep up towards that 79.50. As you see here in yesterday's video, if you go back and play yesterday's video at 19 minutes 53 seconds, I show that the main target above is 79.50, and what I said is if we push through the 72.73 area, we start to then work our way to the high volume node on the bigger profile, which is at 2179.50. That becomes the next target, and then once we get up there, it's likely to rotate, and then if there's more buying to be done, and of course the market is likely to go more and more protective into Friday's number as the week moves on. But if anything, then it'll push new all-time highs as the next key area to test. If we fail on Friday, if we have a number that's very, very strong, then the expectation is that the market will likely rotate down because it gives the Fed the ammo it needs to raise interest rates. Remember, the Fed wants to raise interest rates. We are now at the low end. There's not much protection against any further weakness in the economy, or not further, but any weakness in the economy. The interest rate becomes one of the key tools to control that is not at their disposal because we're at the low end of the range at 25 basis points, 0 to 25 basis points. So they want to move those interest rates as quickly as possible without damaging growth, and that's been the challenge and what the market's been working on for a long time. So anyway, we pushed into this point of control. So Hypo 1, no, it didn't work out. We did not have the market test up and then sit sideways. And Hypo 2, definitely no. So that idea also did not work. The expectation of Hypo 2 is to push through the overnight high, test into that thin zone, the 72.73 with a 74 backstop, look for the short somewhere in here, and then look for a rotation back down through the gap zone, and then the target becomes 2160.50. That idea did not work at all either. So neither one of these worked, and that's just trading. That's just part of the business that we're in. Here's what actually happened. What actually happened yesterday, and just this chart's actually simpler than it looks. What actually happened is we tested down by 2 ticks. However, you could say it was an open test drive, but the drive was fairly strong. We immediately went into a positive delta with a push and a consolidation, a slight distribution here, and then another push and a slight distribution to build the next leg, another push, another zipper, and then we sat sideways in this wide zipper, building a nice heavy profile at the top. So you can see here, this is a P-shaped profile, a kind of a mirrored P-shaped profile, and it took all morning basically until the European close in here before we continue to break higher. Look at where the point of control is. This is what's important about volume profiling. It is not random. It is not some nonsense. Look at where the point of control is. The point of control is dead on top of the MCV that I talked about at 21.79 and a quarter that I highlighted in the morning session, and that's a market that's now trading this one-way market is not fun for me. Unfortunately, it's my way of approaching the market is not a mean. I'm not a mean reversion trader. What I am is I look for an impulse. I look for the pullback. I gauge the pullback, and I look for the return to go with the trend. So I generally trade with the trend if I'm trading from the inside out, meaning that I'm trading from a market that is coming from balance and moving out of balance. But if the market is in balance and is trading in balance, then I'm looking for failure back towards the prior day's balance, pullback, and then look for the turn and then the continuation. That's how I'm looking at things. So when you have situations where, like this, it just pushes with very, very few pullbacks, I'm essentially sitting on my hands and just basically watching until something gives me an incentive to risk assets for a higher probability. But overall, this profile here is balanced up top with a stem. We can see it in the volume and the market profile chart here just as easily. We can see that we had an excess low below, and then we went into balance. This is a P-shaped profile. This is a short covering profile. This is a market that is very aggressively pushed towards higher prices, and has rested. And where does it rest? It rests right on top of the MC point of control. Where does this MC point of control come from? We'll talk about that here. So we look at the balance that we've been in since the beginning of August, with a sub balance that we had in the middle of it right in here. I took that out because we've kind of exceeded it. But if you look at the August profile, you'll see that the most valuable price is right there, this black line, which is also the most valuable price going back to the gap, since the gap up of July 12th. So the market is really in sync here, and is trading right into the balance that as expected. And we ended up basically pushing into the MC point of control, and it did exactly what we expect in a normal auction or a natural auction, and that is you push into the point of control, you have a small pullback, you push through, then you push back through it from the top to the bottom, and then you balance around it, and that is considered remember, this represents volume. This is these are the prices that participants were most active in, and participants would not be active in prices that are considered unfair by buyers or sellers. If they're unfair to buyers, guess what? Buyers don't buy anymore, so sellers don't sell, because for every buyer there's a seller. There's no float here in futures. For every buyer there has to be a seller, and as price moves away, you see these tapers, you see these necklines down below. There's less participation, and there's the most participation when price is considered fair given the information at hand, and the market has moved back into a fair price. And so the expectation, once it moves back to a fair price, is it's likely to hold in a steady holding pattern until further information comes in, and that further information is expected this Friday. So as we move this profile forward, keep an eye on the left. To the left, keep an eye on this, the most valuable price. Keep an eye on that and see how it moves. You see how it moved down. The MC point of control is shifting down, and then as time goes on and we spend more time up top, it shifts back up and it comes back into line, and we are back into the MC point of control. And that's where we're opening. And if you look at the overnight session, 4 points for the overnight session. And that makes sense. We are back dead nuts in the middle of balance. There's just nothing to do. So let's take a quick look here at the overnight session. Just nothing there. Now, we had the same thing yesterday. We had this really tight profile, weak low. We did have by the time the trader bite was being done, we were in here, and it looked like the market was pushing through, was looking for a pullback, and then pushed through to push the overnight high, and that's why we talked about the overnight high being vulnerable on the open, which it was, and it was taken out, but it was taken out with a very strong push on the first 15-minute bar. And then later volume fell back into line. But yesterday, 144,000 contracts. By the time the market opened, it was about 126,000 when I was talking. And then today, 146,000 right now, so it's likely to be 160,000 or so by the time the market opens. 290 is the most common volume for the overnight session. If you look at the overnight profile, very high kurtosis, very high kurtosis, very tight value area in the overnight session. The point of control is basically in line. All this has done is shift downwards in a choppy, steady downwards move. Very tough trade or non-existent trade overnight. The UK is not closed today. It was yesterday, which explains part of the dead volume. But this morning, we just have a very, very quiet market. When I scan to look at the notes, when I look at the notes yesterday, the notes opened with a little bit of pep right off the get-go. Remember, the notes open at 7:20 Central, 8:20 Eastern. They had a little bit of pep in them, but they went into the steady rally with. They went into a steady rally with the Treasury, with the indices, with yesterday's rally dominated by the financial companies. Remember, higher interest rates mean more profit to financial firms. They can collect more interest. And so, in general, it seems like the market is working its way into that probability we saw yesterday at 64%, expecting an interest rate rise by the end of the year. When we look at the Bund for an idea of how volatile or how much movement the market is, as someone correctly pointed out yesterday, the Bund was very busy in the pre-open, in the overnight session. Should have paid attention to that. This morning is a little bit quieter, but it's also in an uptrend, and there is a fair amount of movement. We see the delta shifting around a fair amount in the Bund. So we may have the same situation this morning where the market is expected to be quiet. Given all factors, the market is expected to open in a quiet way. But as Dalton talks about, when you have a profile that is very tight and consolidated and has a very, very small range, it's like a lamp. It's like a tall lamp that has a small base. It's very easy for it to tip over, and I hope that's what's going to happen this morning with a 4-point range overnight. The expectation is that we're likely to drive out and probably test the overnight high and the low before we do whatever we're going to do. The expectation this morning is for actually for a test down below. I expect the market to look to test this neckline. Gosh, I can't draw a straight line. To look to test a neckline, I'm looking for the market to drop and test below. I'm looking for a test of 73, 70, 72, 73 from below. I'm looking for a small bounce back up, and I'm looking for what was expected yesterday, which was for it to test both sides and just play in the middle play in the middle yet again. As far as hypo number two, if we don't test below, then we're likely to test higher. But overall, I'm really not expecting much movement from this area. I expect the market to move back and forth. There's nothing here that could drive a revaluation other than a news event. But overall, we're looking at where, one of the big things I look for, there's a sticker on my monitor that says, which way is risk moving? Is it on or off? Is risk coming on or off? And right now, looking across the futures, the universe of futures that I watch, the DAX being strongest at 1%, up 1%, followed by the Euro stocks also up 1%, and then crude. It seems like it's a mixed bag. The European indices are fairly strong. Energy is fairly strong. The dollar's fairly strong. And then all of the U.S. markets are down, including the 10-year note all the way down to the Japanese yen. Everything is down. The Japanese yen being the inverse. I'm charting the inverse of the actual yen pair. The yen is actually weak this morning. So overall, it's a mixed bag. So I can only expect that this is what's likely to happen. We're likely to test these overnight levels and be stuck here at the MC point of control. Again, I can only advise you to just pay attention to your emotions and make sure that you're not committing too much to any one trade. Okay, so look look for your opportunities and be very picky. Today is likely to be another day where we kind of struggle through the day. Again, Friday is a big day. You want to keep your powder dry for Friday. Good luck, and I'll catch you tomorrow. Take care.